Hi everyone, welcome back to Bearish Podcast. So in this session, we are going to discuss about the stock split which is announced by Dr. Reddy. So Anand sir speaks about this stock and he says that it is a good company to consider investing in that. And when the investors are looking at it, the price is always on the higher side. But when it comes to considering it with regards to PE, it is always on the lower side. And it is 20.5 as we are recording this video. So, is it a good opportunity for the investors to consider investing in Dr. Reddy stock as they announced that it is going to split?
Okay, let me first explain this. Dr. Reddy is a fabulous company. If you see its earnings for the last 3 years, it's phenomenal. And the company is a very good company. It's an old company. My father invested in that company way back when they put the IPO itself. So it's been in our portfolio for a very long time. But the problem is the price. The price of a single share is above 6,000 rupees. But what you must realize is 6,000 is way beyond tiffin coffee for all of us. 6,000 is Rupesh's holiday. If Rupesh is going for a weekend holiday somewhere to Pondicherry, 6,000 rupees is his budget. So we're talking 3,000, he's saying. See? So it's for 2 holidays. He'll have to sacrifice 2 holidays to buy 1 share of Dr. Reddy. Or almost half his salary or more trying to pick up 1 or 2 shares.
Yeah.
This is why you've not seen an explosion in the PE. Because most retail investors cannot afford it. So if I'm going to put 6,000 rupees, I'd rather spread my bets, like Shashwat says, instead of putting it in one company, buy a little bit of ITC or buy one Manappuram, one ITC and one something else. Tata Motors, DVR. So all that put together, I buy 4 or 5 shares in so-called considerations. It's far more better for me than to buy one Reddy. Because all my eggs are not in one basket. My anxiety will be much lower. This is even the people who run Dr. Reddy know this. Because the investors and shareholders of Dr. Reddy are telling the board,
The price is on the higher side.
because if I have 100 shares of Dr. Reddy, I just want to liquidate a little bit. I can't. I'll have to liquidate 1 share itself 6,000. So I'll have to liquidate quite a bit. So even as an investor, for me it's much better that instead of having 100 shares where each share is 6,000, I'd rather have 10,000 shares where each share is worth probably 300, 400.
Okay.
So that way I have far more flexibility. If I want to pledge and borrow money, it's easy. If I want to just sell a little bit to buy one motorbike, it's easy. Right?
Yes.
So that's why the value of the stock should always be in the range of a retail investor. That means the volume of trade also goes up. That means there's more liquidity in your company as far as investors are concerned. So the board is being pressured by investors to take this into consideration. It's not the other way around. It is not the CEO or the board suddenly saying, okay, let us split. Because as far as the company is concerned, it makes no difference to the company.
Okay.
Whatever the share price is, whatever if it is face value is, to the company running its business, it makes no difference. Who is really affected by all this is the investors. So the investors have been pleading with the company. And this is not the first time Dr. Reddy is doing this. In the history, it was face value was 10. They split it into 2 and made it 5. This was some time back. So now they're saying, let us divide by 5.
Okay.
Right? So it will become even more accessible. So if you take 6,000, 7,000, you round it up. And you divide that by 5, how much is it?
1,400 something around there.
1,400 Rupesh might think, okay. Looking at Amaraj's battery and looking at this, you might say, okay, Amaraj's battery has become too much the PE. Maybe I should do a Reddy. Reddy Garu will become patas, go. Maybe I should switch. A lot of investors might decide and switch over. And also, when you have what you call mutual fund houses and they have to allocate funds, it's much easier to allocate a fund to a company when the price is more reachable. Let's say you're in a pharma index or whatever. So the weightage of the index and everything also is much easier when the price of the company comes down to a more reasonable level. So this is all taken into consideration. Now, this is not done and dusted. The board cannot decide to do this on its own. The board is going to meet tomorrow, or it would have, by the time this video comes out, they would have already met. The news would have come out, the board met. And I'll tell you what the meeting is. Okay, it doesn't need any rocket science or astrology. The board would have sat, they would have said, we're considering this proposal. We'll take this proposal and we'll go to the shareholders and ask the shareholders first to vote. The shareholders of Dr. Reddy have to vote in majority saying, yes, we will do this.
Okay.
Then they can go and get all the other regulatory board approvals done. So this is going to be a long process. Is this going to affect the PE? No. Because the price will change and the bottom will change. In the PE, the earnings per share, the top is price per share. So both will move in tandem when the number of shares increase.
Okay.
So the PE is not going to change. All that will happen is price per share will drop. So you can reach it as an investor. It is good for existing investors of Dr. Reddy. That doesn't mean you go buy Dr. Reddy right now thinking that some special thing is going to happen when you split.
Okay.
Nothing special will come. But if you've already been sitting on Dr. Reddy for 10 years and you wanted to just get some Reddy and buy something else, it gives you that flexibility easier.
Okay.
Understood?
Yeah.
So this is what you can expect from the split. And lots of companies have done this. It's a very prudent thing to do. Like everyone wants MRF to do this.
Yeah.
MRF is at 1 lakh, I think, something.
1,50,000 it has cost.
Yeah. So its face value is 10. They're saying, why can't you at least make it face value 1? Divided by 10. So at least 15,000 rupees one share. Even then, I don't think any Rupesh me and all cannot afford to buy it. We'll just look at it and say, huh.
It's like going to the shopping mall and just seeing the shop and without buying that, we'll go.
The amount of liquidation of the shares that needs to be done to MRF for us to reach it will have to be in a magnitude of 100-fold. Right? So then when it comes 150 rupees, 200 rupees a share, then everybody will be buying MRF up and down. So this is where it is.
And one more stock which Anand sir speaks about is Thangamayil. They announced the bonus share where for every stock they issued a bonus share of 1. So how does bonus share and stock split work?
Stock split is there's no what you call new shares being created. Meaning the amount of pothole which is there is just being split. It's like taking one coconut and breaking it into 2. In terms of bonus, you're actually creating.
Okay.
Right?
Yes, sir.
And that's what it's called a split. It's taking something which is existing and you're breaking it into 2 halves. Here, you're getting something new. You're creating absolutely something new. But both of them is liquidation of stock. So in bonus, what happens is earnings per share will increase. That's why it's called diluted. Remember we spoke about a diluted earnings per share?
In Adobe's podcast.
Yes, in that we spoke. You were asking me what is diluted. So now in Thangamayil, they're going to give bonus. You know how many bonus shares will come. So then you take the earnings per share and you dilute it, saying today the earnings per share is so much because there's only so many shares. But once these bonus shares come, the number of shares will become so much.
Okay.
So the earnings gets diluted to this level. That means the price to earnings also goes up because the denominator becomes smaller. The numerator is still the same price.
Okay.
The denominator is becoming smaller, so the price to earnings increases. Understood?
Yes, sir.
That's what happens. But these are all only market dynamics. This is rewarding the investor. By giving bonus, people who want to get some money off the table can use the bonus shares, sell the bonus shares and get some of the capital. Let's say you put 100 rupees and you invested, right? And you've been waiting for 10 years. So when they give you bonus like this, at least you can remove your 100 rupees back.
Okay.
Without liquidating your holding.
Yes, sir.
Understood?
Understood.
Yeah. Just a way of rewarding. They're giving dividends or giving some cash. But instead of giving cash, they're giving you shares, which you can do what you want.
So I hope that this video is informative and I had some knowledge about stock split and bonus shares. So if you found this video informative and useful, please share it with your friends whom you think it will be helpful for them to understand stock split. So like this video and subscribe to this channel for more kind of videos. See you in another episode with an interesting topic. Thanks for watching the video.
Thank you.